Hi, welcome to this video date, 29th of December. It's Thursday. In today's video, we're going to give our outlook for some Japanese yen pairs. Now, in terms of the yen, we think there could be significant strength ahead. Now, in terms of pairs I want to look at, they're going to be USD, JPY, then AUD, NZD, and GBP, JPY. We'll go over the charts in just a moment. Now, in our view, the fundamentals have turned out and out bullish for the Japanese yen. It's very oversold. And I think, at this moment in time, yen longs offer really attractive risk to reward trades. Now, in terms of the logic of our view and the key levels of technical support and resistance, we'll go and take a look at the charts. But just before we go over and take a look at the trade setups, if you want to learn our trading strategy, learn all our trading techniques, and also check out our daily technical sentiment analysis of 14 FX pairs, just go to the link beneath this video and you get live access to our member centre. Now, live access will shortly end, but you can lock it in now with a discount on your membership fee. Details beneath the video, also links to our Facebook page if you wish to follow it, and also our Facebook group of traders if you wish to join it. Now, in terms of the first trade setup we're going to look at, it's going to be USD JPY. Right, on the chart of USD JPY, it's a monthly chart first, just to see the big picture, then we're going to shift to the daily chart. Now, in terms of the dollar, it did have a big move up on the yen. That ended last month with a big red, and we followed on in December. There's more downside to come. I think we'll get to 125, so the candles I'm highlighting back in 2015. Then we'll probably overshoot to 120, okay? So plenty of downside potential. Now, in terms of making that target, you can't do it from technicals alone. You've got to take a view of the fundamentals and sentiment behind the chart. Now, in terms of a summary of our view, just quickly go through it. This is an article on our blog, link beneath the video, and go and read it. I'm just going to pick out main points from it in this video, okay? Now, Bank of Japan recently adjusted their bond yield control, allowing bond yields to be capped at 0.5% on the upside. They've previously been holding the yield down, or borrowing costs, at 0.25%. Now, this tweak, okay, they say Bank of Japan, it's not an interest rate hike, but it is in all but name. It is the first step to them normalizing monetary policy. If you look at Bank of Japan, they've been the only dovish central bank. Other central banks have been hiking rates, okay? That is changing, and it has to change because of inflation. We are now at a 40-year high, okay? And you can see inflation really picking up steam to the upside. Monetary policy members, or the Bank of Japan board, many of them are worried about an overshoot of inflation to the upside. They know they have to act, okay? So you are going to see soon a move to a more hawkish Bank of Japan as other central banks who've raised rates start to finish their hiking. It's hugely significant, okay? But also is very significant is that what did Japanese investors do when the Bank of Japan have been really dovish? Well, they've sent money overseas. They've sent a huge amount. If we look at the net international investment position, it's worth 64% of the country's gross domestic product. This means Japanese investors hold 3.2 trillion more in foreign assets than overseas investors hold in Japan, making Japan the world's biggest creditor nation. Just a small proportion of this money flowing back to Japan will have an outsized impact in terms of the USD JPY exchange rate, and that will spill over into the crosses. A couple of charts here on the international investment position. Now, just show you a chart of one of the major holdings for Japanese investors, US bonds or US treasuries. We're now seeing a decline. It's going to gather pace as they sell out of bonds. Those bonds going back to Japan will obviously firm the yen. They'll also sell out of stocks as well. So you've had a big shift in the fundamentals, which points, in our view, to more yen strength. All right, let's go and take a look at the daily charts. So obviously we're starting with USD JPY. All right, in terms of USD JPY, we get a big fall here, rally there, fall. We rally back to the 20-day moving average, the green line, which very often acts as resistance in uptrends and support in downtrends. We test it there, get rejected on the red, back up on the blue, can't quite reach the 20, we do here, then we fall to oversold, then we rally back and we've decided to sell. You can see it just below the 20-day moving average into 134. Now, in terms, I wouldn't rule out another move up to test the 20-day moving average. If that happened, you could sell back through 134. I think 136 is strong resistance. So risking 230 pips. I think downside potential is pretty big in our view, of course. So it's a good risk to reward trade. And also, in terms of the yen, the crosses look excellent. There might be more potential in the crosses than against the USD even. Now, in terms of pair we've been very focused on recently, not just against the yen in terms of selling, but in other pairs as well, is the NZD. And that's the first cross I want to look at. So let's go and take a look at it. Right, on NZD JPY. Now, in terms of the NZD, really big fall on the red, and then a rally to correct oversold. Now, in terms of this one, we've got a target of 81, which is daily support, and then you can take a look at the monthly chart yourself. 76 is the next level down, so right down here. Now, in terms of the rally, if we can't get through 85, we're just going to sell through 84. Look for chart lows, then monthly support. If we flick above 85, you can see it here, I'm going to sell at 84.80, stop behind the 20-day moving average and the 86 resistance level. So yeah, look for a failed breakout higher or just take a break lower. Plenty of downside potential against risk. Now, in terms of the NZD and other commodity currencies, we've got a slowing global economy. That's really bearish for them. The yen will hold up better. Also, if we get risk off, which we're expecting, the yen again will hold up better than the commodity currencies, and we view other yen fundamentals as bullish. So yeah, rally, a selling opportunity. In terms of AUD JPY, this one, big red down, we rallied back up, and what we wanted to do yesterday was sell into the 20-day moving average 91 level, which we've done. We're now short, and I'm looking for this to hold on a close basis. Okay, I'm giving the stop a bit of room back to 92.30. Now, in terms of if we rally higher, you can look to sell weakness, okay, or take a break of the low here. If you take a break of the low, if we go through the low, our stop will move in behind the 91 level to something like 91.40. You want to take a break of 89.60 if coming in lower. Plenty of downside this one. We're looking just for a move down to monthly support at 80, so potentially 1,000 pips, of course, if our view is correct. Okay, both commodity currencies look long-term sells. I want to look at GBP JPY. I did a video on the euro earlier on where I covered euro JPY, so I'm not going to cover it in this video. We're still short of this one from the big breakdown, bit of sideways. You've got 162 as resistance, 160 as support. Okay, we poked 162 yesterday, couldn't get through, then reversed back to the downside. We're trading off the low. I would just go through 159.70 on a break lower and then see if we run. Now, 154 is the first target, then I'm looking for a run on to 150. We may go even lower than that. I'm not very bullish of the pound at all at the moment. Huge problems in the UK. So yeah, the yen for us, yeah, we just view it as long-term bullish. We'll see if our view is correct. But that is the video for the day. I hope you found it useful. Thanks for watching.